Hello everyone. Today I'm going to talk about capital market instrument in Indonesia. Basically, the different types of investment tools or product that we can find in the Indonesian capital market. When we talk about the capital market, we are talking about a place where people and companies meet. Investors bring their money and companies use that money to grow their business. But the tools or product they use to do this are called instrument. So let's go through the main types of capital market instrument one by one. First, we have stock, also known as share. Stock represents ownership in a company. When someone buys a company's shares, they actually become one of the owners of that company. For example, if you buy a share of Bank BCA or Telkom Indonesia, you technically own a small part of that company. The benefit of owning stock is that you can earn dividend, a part of the company's profit, and also get capital gains if the stock price goes up. But of course, there's also a risk. The price can go down, so investing in stock needs good knowledge and strategy. Next, we have bonds. Bonds are basically debt instrument. When you buy a bond, you're not owning the company, you're lending your money to it. The company, or sometimes the government, promise to pay you back after a certain period with interest. In Indonesia, there are several types of bonds, such as corporate bonds, government bonds. Bonds are usually considered safer than stock, but the profit is also more stable and smaller. The third instrument is mutual funds, or Indonesian Raksadana. A mutual funds collect money from many investors, and a professional manager invests that money in various assets like stock, bonds, or money market instruments. This is a great choice for beginners because you don't need to analyze or pick stock yourself. The fund manager does all the work and you just monitor the result. Next, we have exchange trade funds or IVTS. IVTS are kind of similar to mutual funds, but the difference is that ITVs are traded directly on the stock exchange, just like regular stock. So you can buy and sell them anytime during trading hours. Then there's derivatives. These are a bit more advanced. Derivatives are financial contracts whose value depends on another assets, for example, a stock or a commodity. In Indonesia, the most common types of derivatives are stock option and future contract. They're often used for hedging or speculation, but they require good understanding and experience. Finally, we also have sukuk. Which are Islamic bonds? Sukuk work like bonds, but they follow Islamic principle, meaning there's no interest and profit are shared based on actual business performance. Sukuk are getting more popular in Indonesia, especially because Indonesia has a large Muslim population. So, to summarize, the Indonesian capital market offers many kinds of instruments: stock, bonds, mutual funds, ITVs, derivatives, and sukuk. Each of them has different characteristics, risks, and returns. Understanding this instrument is really important before you start investing. The key is to match your financial goals and risk tolerance with the right types of instrument. And that's the overview of capital market instrument in Indonesia, how they work and why they matter for both investor and the country economy. So that's all for today's session. I hope what I've shared can give you new insight and help you see things from a different perspective. Thank you for listening. Bye bye.